Good evening, this is Nicken and from VolumeProfileTrader.com. Wednesday, November 16th, and today we're just going to jump right in. Today was a pretty ugly day for the market. It opened lower, traded up to yesterday's close, and then failed, and we made new lows relative to the last couple of days. You can see what's going on here. We've had our consolidation that we've talked about, and it looks like this could be a potential breaker if we don't see some type of bullishness in the market come tomorrow, really. So this, where we closed at 1235.67. If these levels don't hold, then it's pretty much I wouldn't say get out of the market, but I'm sure we'll test the 1200 to 1180 level on the S&P in no time, and we may, maybe back down to the 1120 to 1150 range. So it's hard to say if that's the case. Today, just to give you an idea of what was going on and what I was doing, basically anything today that wasn't working, I sold, and I just got rid of the risk. And I took some small losses, I took some small gains, but nothing major either way. And I just want to make sure that if the market does basically move lower, which it looks like it's going to break this uptrend, and I'm going to want to be prepared for and have cash so I'm not selling at lower prices. I can always buy them back if the market shows me strength and shows me that it's going to be an upside breakout. But the way it closed today, and the volume today was better than, say, the last 4 days or so, since this last big sell day. So what we're seeing here is basically any rally up has been on light volume, and this is all relative, on light volume and finding big selling after the rally up to resistance. It's pretty much, other than this time where it took 2 days, it's taken 1 day each time the market's gotten up at resistance to erase those gains. It happened back last week, and it's happened again today. Now, granted, the range is tighter. It's gotten tighter. It's taken no time to flush out those gains. And basically, if we see more downside in this market, our immediate target's going to be the it's about 1215 level. That's our first target, but ultimately 1200 to 1180 on the S&P. That's what we're probably going to look at. So there's still a chance that that we'll hold these levels, but I'm not putting money on it. I've gotten rid of a ton of risk just to prepare for that. And I also, one thing I did do was buy the SPY December 124 puts outright. I bought those this morning, and they're sitting on a gain right now, probably of around 15%. So nothing major, but just to let you know what I'm doing. So let's jump into what the market's doing on an intraday basis. We're just going to cover the Dow here, and what we're seeing is the Dow is still, it's more constructive than the S&P, and I'll show you why on the intraday chart. And one reason is because it traded, although we had a lower low today, or a lower high relative to yesterday, we're still at the top of the range, where the S&P's in the middle of the range, breaking down towards the bottom of the range, sitting at crucial levels. The Dow, even if this trend line is broken, which will be bad news, because look how many times it's held just in the length of this chart. Back at it looks like October 18th, 20th, November 1st, looks like it made a nice low there, and November 9th. So here, November, we're waiting to see, will this ultimately push up? And I'm not betting on it. Right now, I'm definitely have a bias to the downside, and I may be shocked tomorrow if the market opens up 2% and continues higher, but I don't think I will be. I think there's a lot of people who've bought expecting for more upside and don't want to miss out. they're going to be disappointed, and they're going to ignite the selling pressure that will move this market back down another 5%. Should be pretty quick. So just watch out. You don't have to take part of the short side if you don't want to. You can just be a buyer, but just be aware that if this market moves down 5%, you're going to be holding some losing positions that I'm sure you'd rather have sold, even if it's for small losses at higher levels. So let's go back to the S&P to show you. So the S&P, it closed at the lows of the day practically, but after hours we have a little more downside pressure. So technically this trend line's broken after hours, but we'll see if the market opens up tomorrow higher than where it closed. We're still in for potential upside, but just the way we're seeing lower lows that are even at a sharper level relative to the last few. So really, it's our resistance zone that we talked about in a couple videos ago, and it's the momentum seems to be picking up to the downside. One thing I just want to say is we can't discount the fact that last time we had this huge volume spike at the end of the day. It just ended up being a bottom. So, it could be, and you can't rule it out, but I'm playing for more downside in this market. I feel like there's more potential to the downside than upside, and this is a change of bias. Even yesterday, I was disappointed on how the market closed. It kind of shifted my viewpoint, but today was definitely, to me, a potential game changer.